Good morning, everybody. It's Monday, September 27th. Just going to run through a bunch of charts here. Here we've got the Kitco Gold Overlay chart showing the past 3 days of gold price trading. Anyways, last week we saw the price run up towards this $1,300 area, and it stalled out and then pulled back a little bit and traded flat for the rest of the session. This morning we're seeing gold move up to the $1,300 area this morning. It pulled back and it's tested a little bit higher again this morning. It's just starting to pull back a little bit now. We'll see if it can end up holding above that level or not. I think it should act as a pretty good resistance point, and if we do get a close above it, then it'll be a fairly bullish sign for the price of gold to continue to grind its way higher. But because it's 1,300, it's a whole number, and a lot of people set profit targets there, and they also look to short at whole numbers. So you usually find resistance at the $1,300 at whole numbers, so 1,300 and 1,200 and so on. So that's what I'm looking for there. If I pull up the chart of gold, the daily chart, here you can see we've broken above last week, above this rising wedge here, and it just continues to have a slow grind up. If I pull up the 60-minute chart, it's pretty much the same picture, but you can see it's trading right at 1,300 area. It's trying to grind its way through it. It's finding resistance there. It does have a nice flat top and a rising bottom, so it could easily pop through it once it eats through all that resistance there. So we want to see how that's going to unfold in the next couple days. If it closes above 1,300, it could continue to grind its way up for. It could go for several more days, but gold in general is overextended, and I feel that jumping in right here could be chasing. If you're already long, you might as well just continue to move your stop up, and you can use the daily chart for that. Just drawing simple trend line off support bottoms, you'd be looking to put a protective stop somewhere. You want it a little bit below the support trend line. A lot of times they get shaken out. You'll see a pierce and then it'll reverse. But gold will continue to grind its way higher until we see some pretty good panic selling and a key trend line broken here. Now if we take a quick look at silver, silver's been on a tear. It just continues to go up, and it's much in the same boat as gold. It's had this nice run up. If you look at the size of the move, pretty much anytime we've had a move about that size in the past without much of a correction, we've seen pretty much a fairly substantial pullback. And in a downtrend, the pullback obviously it made a lower low, but in an uptrend it usually gives back just more, usually about halfway, if not a full retrace back down to where it started. Sometimes it doesn't go all the way. It'll be about a 30-40% retrace. But so if we're looking here, I bet you we'll get some type of pullback down into this area, possibly just touch the top here. But I do feel as though we're getting overextended and there's going to be some type of pullback before it continues higher. So right now I think it's overextended. I'm buying right now on a straight rally that's gone straight up. When you look at the past history, any move about this length usually ends with some type of correction lasting a week or two, and then we'll get continued in the uptrend. So I don't really want to jump in and chase right here, so we're just going to let it play out a little bit more. Now if we take a look at the US dollar, you can see this is a 60-minute chart. Trend has been down. I mentioned in the report there this weekend we're coming into a gap window, and this is where on Friday the dollar closed right down here. And this morning we're just kind of grinding a little bit lower, which is possibly giving us a pretty good oversold reading on the dollar, and it's filling in that gap window I pointed out. And we might get a reversal any day soon, which will put some pressure on gold and it'll put some pressure on equities. Now the US dollar has been down, and of course as it goes down, the crude oil wants to go up. We can see the last little while crude's worked its way higher. Right now it's trading at resistance on this underneath this support trend line or resistance trend line now, and it is forming this bearish type of flag here. Usually you kind of get that grind near the end of a move, and you'll see it correct back down. So it'll be interesting to see what happens with the dollar and crude oil. It is trading at resistance. Of course, if it breaks from here, we could see it pop up into these highs or test this yellow trend line that's up here. But right now it's a little overdone and it's looking a little bearish on the 60-minute chart. Now if we pull up the SP 500 futures, you can see last night we had a pop in price. It went a little bit higher, almost to 1150, and it's pulled back down so far this morning. And that's pretty much carryover from, I'll just pull up 60-minute chart here. It's pretty much carryover from Friday's big buying. Just going to pull up the 24-hour chart. The markets closed right here yesterday, or sorry, on Friday. And once they opened futures last night, I was watching the time and sales window, and there was nothing but buyers there. It was just a group of a bunch of big orders went through, and of course it just ran the price straight up. And ever since then, we've been seeing some profit taking coming back down. And we'll see what happens this morning. It's trading pretty much flat from where it closed on Friday. But let me just pull the daily chart back up here. If I pull up the SP 500 ETF, you'll see there is a gap window here that I'm looking at right here. There's the bottom of the window is right here, and then gap fill is just up here. So we do have this window. Of course, this is the SP 500. Doesn't show the price up here, but usually you pierce into the gap window, and a lot of times you'll find a reversal from there. So this is pretty much the last stance for the S&P. If it wants to break through this, then we're going to have to get in line with what the market's doing right now. We've got a short position in the S&P. We're only down about 2.5% at this time. And we're just going to let it play out a little bit more. We've got today, it could be the end of window dressing, and it takes 3 days for settlement, which is why today would be the end of any window dressing for the funds. So I'm just going to give it another day or so to look at it and see what the price action does. If we get a rollover, that'll be great. If we see continued strength and market internals start to strengthen, then we'll probably cover our position and look for a new entry. Anyways, that's it for now, and I'll talk to you later. Bye-bye.